The Canadian government has a small business loan program that funded over $1 billion in financing last year, and most Canadian business owners have never even heard of it. In this video, I'm going to break down exactly what the Canada Small Business Financing Program is, who qualifies, and how to actually apply it. Most Canadian small businesses get rejected the first time they apply for a regular bank loan. The bank wants 2 years of profitability, hard collateral, and a personal guarantee from the founder. Startups, immigrant-owned businesses, and companies that just had a tough year all get told no, even when their business is growing. The CSBFP exists for exactly that situation. It's a federal program that shares the lending risk with banks, credit unions, and popularities, which makes institutions willing to fund businesses they normally turn down. In the 2024-2025 fiscal year, 74% of CSBFP loans went to startups and businesses operating less than a year. There are 3 things to understand how the program actually works. The first is what you can borrow. The total cap per business is $1.15 million, which splits into $1 million in terms of loans and $150,000 in lines of credit. Term loans cover real estate, equipment, leasehold improvements, intangible assets like software and trademarks, and startup working capital. Lines of credit cover day-to-day operating expenses. The second is who qualifies. Canadian business owners with up to $10 million in gross annual revenue. Both for-profit and non-profit businesses are eligible in every industry except for farming. There's no requirements for 2 years of profitability and no requirements for terms of hard collateral the traditional banks' loans often demand. The third is cost. Term loans are capped at prime plus 3% for a floating rate, or the posted mortgage rate plus 3% for a fixed rate. Lines of credit are capped at a prime plus 5%. There's also a 2% registration fee on the authorized amount, which you can roll into the loan principal. Compared to a personal credit line or a high-rate online lender, those rates are significantly lower. Here's what that actually looks like for a real Canadian SMB. A 2-year-old Toronto restaurant wants to expand into a second location. They need $400,000 for leasehold improvements, $150,000 for kitchen equipment, and $75,000 in working capital for the first 3 months. Their main bank told them no because the owner doesn't have a personal real estate to put up for collateral. Through the program, the same bank can lend $500,000 in terms of loans and $75,000 on a line of credit because the federal government is sharing the risk. The owner pays prime plus 3% on the term loan and prime plus 5% on the line of credit, plus a 2% registration fee rolled into the loan principal. The expansion happens, the owner pays the loan back over the term, and the business never had to give up equity or pledge personal real estate. If you're going to apply, here's what to prepare. 1 is a business plan with realistic financial projections for the first 2 to 3 years. Lenders want to see that you understand your numbers and your market. 2 is vendor quotes for whatever you're financing. This could be equipment estimates, renovation quotes, software licensing, etc. The lender needs to see exactly what the money is going towards. The third is a participating lender. Almost every Canadian bank, credit union, and Populaire participates in the program, but each one has a different internal criteria. If one rejects you, another might approve you. Don't stop for a single no. The 4 is your existing accounting and bank records. Lenders will want to see the real cash flow, real revenue, real expenses, which means your books need to be in order before you walk in. VEN doesn't issue CSBFP loans directly since the program runs through banks, credit unions, and Kaya's Populaires, but once the loan is approved, VEN handles the operational side cleanly. You get a Canadian business account that holds the loan funds, corporate cards for the expense side, a 2-way QuickBooks or Xero sync so your books match what the lender sees, and a clean reporting that makes follow-up financing applications a lot easier the second time you need capital. The point is the CSBFP exists specifically for small businesses the traditional bank lending leave out, and almost every single Canadian SMB qualifies for at least a portion of this credit. If you want more breakdowns like this for Canadian business owners, make sure to subscribe. The VEN blog also has a full step-by-step walkthrough on applying, and the link is in the description. Make sure to also drop a comment below. Have you applied for the CSBFP financing before, and what was your experience? I'm curious to hear what other people have run into. Thanks again for watching, and I'll see you in the next video.